What just happened? After the market closed on Friday, more fuel is added to the fire that could continue to push the S&P 500 to new high. Welcome to another S&P 500 analysis. Today is December 19, 2020. In this video, we will analyze the S&P 500 and the other major market indexes, and we will review the market internals and the sentiment, and then we will look at what just happened after the close on Friday that could add more fuel to help push the S&P 500 to another record high. Starting with this weekly chart of the S&P 500, we see the price is moving away from the recent breakout of this long-term megaphone channel. The S&P 500 made another all-time high and closed the week with a new closing high. It closed the week at 3,709.41 with a gain of 45.95 or 1.25%. It had a range of 80.86. The 10-week moving average and the 40-week moving average continue trending up. The S&P 500 is above these two moving averages, and they also continue the one-time framing up. So the weekly trend remained to be up. Before we analyze the S&P 500 in more detail, let's go take a look at the market internals and the market sentiment and see what they are telling us about the state of the market. Looking at this sentiment chart, the VIX still remain to be in the lower bound of this zone here between 20 and 30, and it closed the week at 21.57. And the put-call ratio is sitting just a little bit above 0.5. It closed the week at 0.534. And the New York Stock Exchange up-down volume ratio for the week has been pretty much in the 3.3 on an up day on Tuesday, and it was minus 3.8. So on it, it's kind of acted normal on the up and down day with those type of up-down volume ratio. And although Friday it closed down a bit, and we see that the up-down volume ratio was minus 1.87. So there was 1.87 times more down volume than up volume. That was, we had this quad witching, and also where the previous day it closed at a new all-time high. So we would expect some sort of reaction to that on the downside a little bit, and that should not be surprising. And on the daily advanced decline, we did see some respectable number on Tuesday when it was up. The advance led the decliner by 1,582, and on Friday the decliner led the advancer by 455. The New York Stock Exchange new high, new low continue to hover above this 200 level, so which is good. Just tell us that they're all stock continue to make a 52-week high, and they are outnumbering the 52-week lows. And the New York Stock Exchange cumulative AD line is continuing to trend along with the S&P 500. The S&P 500 moved higher, so did the advanced decline line. Now let's take a look at the internal for the NASDAQ market. As you can see on the up-down volume for the NASDAQ is mainly positive throughout the week, except on Friday when it closed down and got a negative 1.02. So basically just slightly negative on the downside as far as the up-down volume is concerned. But throughout the week, it was positive. We did see a negative divergence here on Wednesday and a little bit on Monday. But the advanced decline was pretty respectable for the two big update. And on Friday, it sort of have a little bit led, the decliner led the advancer by 441 issues, while the market pulled back a bit. The NASDAQ 100 was down 13 points. And the NASDAQ new high, new low continue to surge a little bit and holding up at that 400 level. On Friday, it closed with 432 more 52-week high than 52-week low. So it's been quite strong even on the down day on Friday. And the NASDAQ cumulative AD line, similarly to the New York Stock Exchange cumulative AD line, continue to trend up along with the index. So you see the NASDAQ 100 continue to move higher, and the cumulative AD line just follow suit. So all in all, the sentiment doesn't tell us anything new than what it told us last week. The market participants still a little bit cautious, but not overly bullish, or neither are they pessimistic and overly bearish. So right now it is still pretty much neutral, and with the advanced decline, still the cumulative advanced decline line continue to trend up with the market, and not seeing any sort of a divergence, and also with a little bit of an expansion of the new high, new low. The market internal and the sentiment continue to hold up in a positive bias. Now let's analyze the S&P 500. On this daily chart, we see that the S&P 500 came down to this 3646 area, essentially this pivot high here, and got a nice bounce off of it on Monday. Then on Tuesday, Wednesday, and Thursday, we saw that continuation of the upside momentum. And then on Thursday, it actually closed at a new all-time closing high. Friday, although it made a new intraday all-time high, but it did not close with a new all-time closing high. So for the coming week, the scenario that we will be watching on the downside is possibly come back down to this 3646 and retest this potential support level once again, and then we see a bounce back up. Otherwise, we continue to look for a potential or a possibility of coming back down to the 3588 and complete this gap fill. That is still on the table. And then on the upside, we're basically looking for this thing to continue to move up and toward the 3800 level, and then toward the next projected move level, which is the major move of this bull flag here. The 618 will be 38.99, and then also the other thing is we have this Fibonacci extension from the February high to the March low of this 141 extension at 38.91. So those are the upside scenario and the downside scenario for the S&P 500. Now let's go and take a look at the other major market indexes. Starting off with the NASDAQ 100, we can see that the NASDAQ 100 also continue to make its move back up above this balance area. Remember, we talked about this balance area, and we are projecting a major move based on this particular swing. And it pulled back prior week and got a nice bounce back up on Monday, closed just a tad above it, and then continued to move up. And on Thursday, it made a new closing high, and on Friday, made another new all-time intraday high, although it did not close at a new closing high. So for the coming week, we continue to watch the NASDAQ 100 to make its move toward the 13,000 level on the upside. And then on the downside, once again, we're basically looking for this thing to pull back to retest the 12,439 level, which is this pivot high here. And if it continue to pull back inside the balance area, then we'd be looking at this 12,204, that level for potential support. In the Dow Jones Industrial, we see the Dow Jones Industrial continue to trend inside of this channel here. We're waiting for this to break out of this channel and then move toward the 31,000. Then we will adjust this major move projection, because we are basically looking at this as a bull flag move and do this major move based on the breakout of this bull flag. So right now we are essentially still waiting for this breakout. Then we will adjust this accordingly. For example, if it breaks out on Monday, then we'll project this up here. Then the 618 will be somewhere around 31,965. So close to 32,000, and then we just make this projection up to 100% major move, which will be 33,000. But for now, we essentially just keep an eye on for this breakout and move toward the 31,000. Then on the pullback, we are looking for a pullback to possibly back to this lower channel line, trend line here near the 29,600. If it breaks below this channel, then we are looking for this pivot high at 29,199 to get retested. And for the Dow Jones Transportation, we see the Dow Jones Transportation came down and tested the 12,379, got a nice little bounce off of it. So right now it's bouncing back up. So we want to see would it be able to continue to move up toward the 13,000 area. Otherwise, we keep an eye on this 12,379 once again to see would it catch it once again and be able to hold. If it's not, then we'd be looking for the possibility of moving back down to this 12,096 and complete this gap fill here. And for the Russell 2000, we continue to watch the Russell 2000 to move up to this upper trend line here on this channel, this price channel, essentially getting toward the 2000 level. And if it pulls back, then we basically are looking for a pullback somewhere around this 1850 area and see would it get a bounce back up. So that is the major market indexes. And here is what happened after the market closed on Friday. The Federal Reserve released a statement after the close on Friday that cleared the way for major banks to restart share repurchasing. So you can see all these banks will be benefiting from that decision. JP Morgan, Bank of America, Citi, Wells Fargo, Goldman Sachs, Morgan Stanley. And this will add the fuel to the fire of pushing this S&P 500 and the stock market to newer high. Now let's take a look at the financial. Here's the XLF, the ETF for the financial. As you can see from this chart here, this daily chart, the price is still lagging from this February high, while the S&P 500 and all the other major market indexes have exceeded that February high and May all-time high. In comparing to the XLK, the ETF for the technology sector, you can see that how much that it has pushed beyond this February high here. And you can see also the stock market rally basically been fueled by the technology sector. And last week it made another new high. And you can see how much different between the XLF and the XLK, how much the XLF been lagging, behind the technology sectors. And you can see that right now the XLF is still lagging, and it still hasn't even got close to this all-time high yet back in February. So we're basically looking for the XLF to start climbing up toward that high. And we can see that on the after our move here, after that announcement from the Fed on Friday, you can see the surge here. Remember, the close was 28.49, and we see the after hour, it made a move up to 29.40. And if we take a look at the 60-minute after hour, you can see this surge here just right after the close. And the statement came out, and you can see that the XLF really made a surge. And here's the look on some of those banks that will be benefiting from this move. JP Morgan. The JP Morgan and after hour is surge all the way up to 126. And Bank of America, here's the Bank of America, also made a nice surge all the way up to the high of 30.28. And then we also see the Citi Corp, right, made another surge. It also made a surge and went to a high of, in the after hour, 63.15. Wells Fargo also surged after that statement, went to a high of 30.44. And Morgan Stanley also surged up to a high of 68.01. And Goldman Sachs went up to a high of 257. So you can see all these financial banking stock is making a move, and that will push the S&P 500 to a newer high. Just keep an eye on the financial. In summary, the market internal and the sentiment are still favorable and pointing to more new high for the S&P 500. With the Friday after hours announcement from the Fed that allows the bank to buy back their stock, this will definitely add more fuel to the recent rally and will accelerate the rotation from tech to financial and other lagging sector that will recover from the pandemic as the vaccine rollout continues. We will see pullback along the way, but by no means do not call the top until we start seeing deterioration on the internals. Be sure to smash that thumbs up to help me promote and share this video on YouTube. Thank you for watching and stay safe.